in the discussion we made on 13th May, I elaborated almost all the subsidiary books. Apart from cash book, we may maintain or open some subsidiary books to reduce the volume of journal. And apart from cash book, already I had discussed, we should make a purchase journal or purchase register, likewise sales register or sales book, then purchase return, sales return, carriage inward, carriage outward, and at the same time two more subsidiary books can also be opened, that is called bills receivable and bills payable. We know that credit is also a common phenomena of today's business, and definitely we should, or businessmen, try to have the benefit of credit. Sometimes they may go for credit purchase, and sometimes they may go for credit sales. And there is a negotiable instrument that is called bills of exchange, through which some purchases may be made on the basis of bills payable, and likewise when sales are affected on credit, and if we are using bills of exchange, then we can treat this same as bills receivable. From our debtor is a common word in financial accounting. Those who tax the goods or services on credit are called debtor, and those who give the credit, they are called creditors. So apart from maintaining all the subsidiary books, we may go for also bills receivable and bills payable. Nowadays, after advent of information technology and new software system, so many changes have incurred, for which now it has been very easy to keep the accounts daily basis. However, cash book is a common phenomena, and almost all the transactions of the business should be done on cash or in cash. Sometimes we purchase, sometimes we sell, sometimes we pay certain expenditure. Expenses has also certain role in financial accounting. All the expenditure are not to be taken as expenditure if the expenses or if the amount is spent for the sake of business, and if it is definitely done with an objective to earn certain amount of profit, then it is totally dedicated to the business, then it is called expense. So the businessman, as far as our concept is concerned, already we have discussed dual entity concept. The businessman and the business are two different entities. So the personal expenditure of the businessman cannot be taken as the expenditure of the business. The business expenditure is something which is the expenditure which is completely attributable for the business, is called expenditure. Likewise, income, personal income is something different, and business income, earning of the business is something different. And the earnings or the expenditure which are related to business only, that is to be accounted for in our books of accounts. So when we are talking about cash book, definitely our day starts from opening balance, and in case of single column cash book, only cash transactions or only the cash is being accounted for. The cash coming to the business are to be treated in the left side of the T form or T shape of the accounts or T shape of the cash book, most often almost all the business have two folios, means in one page the left side is to be dedicated for the debit and right side of the folio is to be dedicated towards credit. So all the incomings or cash coming to the business are to be recorded in the left side, and all the cash which goes in various heads, means purchase of postage, purchase of stationery, purchase of anything for the business, that is to be treated in the, and in that case if we pay in cash, then that is to be recorded in the right side. And ultimately we can see that some balance will also be there, and that balance is also to be taken to the next day, business day, means the following day. The opening balance of the closing balance of today's cash will be treated as the opening balance of tomorrow's cash. Likewise, when discount is also added, discount column is also added, then that is called double column cash book. Apart from cash receipts and cash payments, we can also account for the, if any discount we allow to others during our receipt, and during our payment also we may be allowed, or our suppliers, or to from whom we would have purchased the goods on credit, that particular businessman or supplier may allow discount. And in that case, instead of, suppose we are paying, instead of payment of 10,000, if we are paying 9,980, then 9,980 is to be treated in the cash column or recorded in the cash column, and the discount column is to be reckoned with rupees 20. Likewise, sometimes some businessman usually gives standing instruction to their accountant to deposit all the money with the bank and not to handle cash. If in that case our all cash transactions are being converted to bank transactions, means our cash is to be deposited with the bank, and all the payments are also to be made either through negotiable instrument, means check or whatever may be, through bank. All the payments are to be made. That is called bank cash book. And to reduce the possibility of pilferage or misappropriation of cash, we may go for bank cash book. And the third one, triple column cash book, is very popular amongst the businessmen because it contains your cash information, bank information, as well as discount information. In the left side of the cash book, both cash, bank and discount columns should be there, and in the right side of the credit side of the cash book, likewise same cash, bank and discount is to be maintained. Triple column cash book is definitely popular to almost all the businessmen and the accountant also. In triple column cash book, there is a special reference to contra entry. Contra entry is, contra means cross, and when we are doing any transaction which will call for contra entry, there are certain situations which call for contra entry or giving a cross reference in the cash book. Suppose it is a standard habit of the accountant to receive the check, suppose from the customers or from the debtors. Debtors, those who are to pay to the businessmen are debtors, and those who are to receive from the business are called creditors. So it is a standing habit of the, or common habit of the accountant to keep the to send the check immediately after receiving from the customers, to send the same to the bank. If the check is directly being received and immediately being sent to the bank, then naturally we may receive in the bank column and we can also deposit the same, and whenever we are sending the same to the bank, it is to be entered likewise, and accordingly our bank balance will also increase. But sometimes the accountant may not be in a position to send the check immediately. So in that case, what he can do, he can keep the check or any negotiable instrument which is to be sent to the bank, which is supposed to be sent subsequently, that is to be kept in the drawer, cash drawer, and that is to be recorded in the cash column. Instead of keeping the same in the bank column, we have to maintain the same in the cash column. We know that the accountant is to keep the accounts in such a way so that the records and accounts, books of accounts will give almost all the information to the users. It may be proprietor, it may be taxation authority, whoever may be. So in that case, if the check amount have been written in the cash column, then automatically on the next day, on the following day, if the accountant is sending the same to the bank, then again it is to be maintained in the right side, in the payment side of the cash book, as if it is cash, because it was written in the cash column, and again it is to be entered in the right side of the cash column. Again it is to be maintained in the left side of the incoming side of the bank column. Left side bank column is to be maintained. So when the cashier or the accountant is not in a position to send the check immediately on receipt, that is also one transaction which calls for contra entry. Again, when cash is being withdrawn from bank for the business use, then that is also to be recorded as contra entry. When cash is withdrawn from the bank, then it was there in the bank, and again it is, if we are withdrawing the same for the business use, then automatically the cash balance with us will also increase. So automatically if cash is withdrawn, then it is also calling for one contra entry. Likewise, when we are sending cash to the bank, then that is also inviting another contra entry. These are the three situations in which we are to maintain contra entry. Number one, if check is deposited with bank subsequently on the date on which we are receiving the same, that situation calls for contra entry. If cash is withdrawn from bank for business use, that is also requiring one contra entry. And if cash, surplus cash is being deposited with bank, then that is also inviting contra entry. What is the major reason behind it? Because if cash is withdrawn from bank, actually it is not going to have a change on our balance. It may, our assets, the face of the assets is changing. Our bank balance is decreasing, our cash balance with our business entities is increasing. So a contra entry should also be maintained in this case. Likewise, when cash is deposited with bank from the available cash, that is also not going to change the face of the, that is also going to change the face of the asset only. Instead of liquid cash, it is to be, if you are depositing the same with the bank, the balance with the bank will increase, but exactly that is not increasing. Exactly means the assets of the business organization is not increasing, rather it was in cash and some part of the cash is also is suppose deposited with bank, then naturally it is going to increase the bank balance, and cash balance will also decrease. So these are the formulas of contra entry, which usually sometimes what sometimes it is very hard to grasp the same with the if our accounting system is not transparent. So naturally, another statement is usually done by the accountant, that is called bank reconciliation statement. Due to some communication gap between bank and our accounts, it is not easy to originally know the balance with the bank and to know what our cash book says. So if it is not tallied, then automatically it may create some doubts on the accounts and at the same times on the cashiers or on the system of our accounting we have adopted. So bank reconciliation statement is also done by the accountant as on a particular date. Due to some communication gap it happens. So bank reconciliation statement is also a particular statement which makes the businessman or the proprietor or the owner of the business sanguine for what or for reasons why there is discrepancy or why the cash balance in our cash book or bank balance in our cash book is not at par with the balance with bank. So naturally we have to go for reconciliation statement, and how it is added, how it is deducted, definitely subsequently I will discuss, and I will show how bank reconciliation statement helps us to sanguine that due to certain communication gap or maybe error of omission, maybe error of commission, so that can also be tackled with the accountant if he is doing your bank reconciliation statement, and that can make us sanguine or convinced that we have to do it periodically. Again, all the informations which are there in the case book and all subsidiaries book, that is to be transferred to our various ledgers according to their title, according to their name. Ledger, that is called ledger. Various ledgers are there. Generally, standardized business houses go for two types of ledgers. One is general ledger and another one is personal ledger or party ledger. General ledger is containing almost all the general item, means all the real accounts and all the nominal accounts also have the place in general ledger, and in case of personal ledger or party ledger, all the parties with whom the business kept the relations, that is to be accounted for or classified in our personal ledger. We may transfer the information from various subsidiary books as well as cash book, and that process of transferring the information or shifting the information from cash book and your subsidiary books is called posting. So posting is the work of classifying. Suppose we are keeping the cash with us, we are maintaining the cash book and we are maintaining the subsidiary books, on the basis of which we can do the work of posting meticulously. And it is also done chronologically, means historically. The event which occurs first is to be recorded first, and the transactions which have been subsequently made, that is to be recorded subsequently. And already I have discussed that in the journal entries we would have kept a place of ledger folio, and in the ledger also we should have a column of journal folio or likewise. So tomorrow we will be discussing practically how journal is to be recorded, journalization work is to be done, and how the subsidiary books are to be maintained, and how the total or periodic total of subsidiary books are transferred from one place to another to various ledgers, and also bank reconciliation statement. Thank you.